Hello investors, welcome to Simpli Stocks. In today's video, I'll be sharing 8 interesting businesses with you that FIIs have recently added to their portfolios in this Q4 March quarter, or basically we can say during this market correction. I have shortlisted these 8 companies across different sectors. This will give you a good framework so you can evaluate opportunities yourself across different sectors. We will look at their shareholding patterns, and we will also discuss what triggers are playing out in these companies that are attracting institutional interest. So today's video is going to be quite interesting because on one hand, we keep hearing that FIIs are pulling money out of India, but on the other hand, their shareholding has increased in these 8 businesses. So there are a lot of learnings for us here. With this, let's get started. The first company where we have seen FII buying is TD Power Systems. TD is an interesting data center bit. We have been tracking it in our Simpli Stocks community for a long time, and we have also covered it on our channel multiple times. Even in this weak market, you will see it has outperformed. And here you will see that FIIs have increased their holding here from 24.4% to 26.7%. The way TD is associated with data centers is that data centers require power backup, and for that they require gas-powered plants. TD manufactures generators for turbines, which are then together installed with a data center. So TD becomes a proxy play in the data center theme. Wherever a data center is being set up, TD's products will be required alongside that. And my view always has been that in many sectors, playing through proxies can be more rewarding than directly buying the main business. In TD's case, there is severe shortage of these specific turbines and generators which are used in data centers. And currently, there is waiting period till 2030, 2032. The demand is so strong, but supply is very limited. Like if you are a data center company and you are placing an order today, you will get delivery after 4-5 years. So this is a strong business model in the data center space that you can explore independently. Now, after the data center, the second business is from slightly boring category, but interesting things are happening over here too. And this company is Bajaj Consumer Care, and it operates in the hair oil segment. You might have heard of the Bajaj Almond Drops hair oil. That is their popular brand. Other than this, they also have a portfolio of coconut and other hair oils. You might be surprised to see that FIIs have increased their shareholding here by 6.7 percentage points from 9.7% to 16.6%. During this time, DII ownership has stayed almost the same and public shareholding has reduced. The reason for this institutional interest is that under new management, the company is performing quite well. The new CEO, Mr. Naveen Pandey, he has taken multiple initiatives from pricing, distribution to revenue management and improving the product mix, or say focusing on higher margin products. So because of this, Bajaj has shown healthy sales and net profit growth. Margins have expanded nicely. Their Q4 results were also strong, and that is why you will see that this business, which did not move for 4 years, has become 3x in the last 14 months. And what's more, that even from this point, there is good enough opportunity. The company plans to grow its non-almond drops portfolio at 30% CAGR to double it in the next 3 years. For their core category, they are targeting about 10% growth, which is healthy for FMCG companies. And valuation wise also, you will see that this business is currently trading at a PE of 30, while FMCG companies usually get premium valuations. So if growth sustains, we can see a re-rating happening over here. You can look into this business independently. It is a simple model. I think you will like it. Now, moving ahead, the third business is Shaily Engineering. Shaily is part of the whole GLP-1 theme, and it manufactures such pre-filled injection pens for pharma companies. These are also called drug delivery devices. Now, if you track the news, or as I have covered it recently on our channel, you would know that semaglutide has gone off patent in India and other countries also. Semaglutide was originally a drug that came for type 2 diabetes patients, but its off prescription use has also surged. It works by suppressing appetite. And people who are obese, or let's say who are looking to lose weight, they have also started using it as off prescription use. And you would know how big the market in India is, because we have so many diabetic, pre-diabetic, and also obese people living in our country. Now, what happens is when a drug goes off patent, its price drops. So if this drug sees mass adoption in markets like India and Canada, Shaily will be a big beneficiary. Their manufacturing capacity is coming up back to back, and pharma companies have already booked it in advance. So this GLP-1 theme can be a mega trend, which is why institutions are showing interest in this business. You will notice how FIIs have increased their shareholding here from 2% to 16.7% over the last 2 years. And in this quarter alone, there was buying of 4.7 percentage points. Plus, you will also see here Ashish Kacholia's name below, as this stock is also part of his portfolio. So you can explore Shaily further. The stock has corrected also recently due to Middle East tensions and crude oil rally. Yes, some people might complain that valuations for TD or Shaily are at premium, but I will say in such cases, you must understand that both are high growth businesses with some moat or specific advantages in their fields. That is why the market is willing to give a premium to them. So you should not simply reject a business just by looking at the high PE. I think you should try to back engineer it and try to understand why the business is getting a premium. And then if it looks fine to you, you can explore it. Now, a humble request, just before moving forward, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week. I know I keep saying this repeatedly and you don't listen, but if you support us, I'll be able to bring more such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Coming back to our discussion, the next business we will study is Blackbuck. This is another unique and interesting business model. The company operates a tech platform for truck owners and operators. They provide services related to tolling and FASTag. They also offer GPS and tracking of trucks, basically allowing truck owner to monitor easily on app whether the driver is following the correct route or not. Now, since Blackbuck is a technology and platform business, margin expansion is playing out here very well. You will see the cost of building a platform is usually one time, with some expenses obviously required for upgrades and maintenance. However, as sales grow, costs do not increase at the same pace. Therefore, what happens is that margins expand very quickly. So this year, we should see such a J curve in Blackbuck's profitability, and that is why this stock is on the radar of institutions. In the shareholding pattern, you will see that FIIs have increased their ownership from 28.3% to 32.5% in the recent March quarter. Now, moving forward, the fifth business on our list is from the large cap space. The stock is Polycab, and it has also seen healthy buying. You will notice that FII shareholding increased by 3.4 percentage points from 14.8% to 18.2%. There are currently many tailwinds in the wires and cables sector which are playing out. Besides regular power demand growth, the installation of green energy, AI, and data centers, all that is also driving demand. Polycab is growing well even on such a large base. So I will say you should not ignore this business just because it is a large cap business. It is a good business. You can look at Polycab if you want some mid cap or large cap exposure in your portfolio. Next, looking at the lending space, the microfinance sector has bounced back very well. Whether you look at Ujjivan or Utkarsh Small Finance Bank, Credit Access Grameen, or say Satin Credit Care, asset quality numbers have improved across the board, and they have also started, or they have also resumed microfinance lending. As for Ujjivan Small Finance, their Q4 business update was strong. Overall disbursements grew by 31%. Disbursements indicate basically how many new loans are being issued or given. You will see here group and individual loans, which are the primary microfinance loans, saw year-on-year growth of 40% and 16% respectively, with about 12% quarter-on-quarter growth for both. Asset quality numbers have also improved, and Ujjivan is also working towards becoming a universal bank. They recently applied for the license too. although the RBI rejected their application this time, but it tells us the management's intent, or say the direction in which they want to take the company, and they will likely apply for universal banking license again. So this is another business which you can look, and here you will see that both FIIs and DIIs have shown interest in Ujjivan. FII ownership went from 15.5% to 17.2%, and DII holding increased from 28.7% to 31.1%. Lastly, we have two more businesses left. Let us quickly look at them. One of them is PC Jewelers. Over the last 1.5 years, the management has worked very hard on trying to improve fundamentals, company image. They have reduced debt by around 90% by raising capital, and the company is now almost debt free. During this period, or during this time, their results have also been good as well, and their Q4 business update was also positive. From here, their focus will be on growth. They currently have about 55 stores, and the management has indicated that over the next 12 to 18 months, they plan to increase their franchisee store count. While they have mentioned an upper limit of up to 100 stores, but we will have to see how many they actually plan to open, or if they actually open. And now, since there was a fundraise, the shareholding pattern has changed. You will see that FII holding has doubled from 6.3% to 13.3%. From a valuation perspective as well, here is an opportunity. This business is currently available at a PE of just 14-15. Now, lastly, the eighth and final business is CGCL, or Capri Global Capital. We saw marginal buying of 1.1 percentage point here. CGCL is in the gold loan space, and this business has been a beneficiary of the recent rally in gold prices. What has happened is, because as the gold price went up, the demand for gold loans also increased, because when gold rates go up, a customer can get a higher amount of loan for the same quantity of gold. On the other hand, the bank or NBFC can also earn more interest income by disbursing larger loans. So this is another business you can look at. And these were the 8 businesses that remained on radar of FIIs even during this market correction. You can explore them yourself. And if you are new to our channel, I will say don't forget to subscribe to Simpli Stocks, because when their results come out in the near future, I'll be covering these businesses again for you on our channel. So don't forget to subscribe. And yes, if you found this video helpful, and if you did not like it earlier, make sure to do it now. Your support through likes helps us to bring more such videos on a regular basis. And if you have any doubts regarding these companies, feel free to shoot them in the comments. I'll see you in the next video. Happy investing.